All right, everyone, buckle up because we're diving deep into something truly revolutionary. June isn't just another month on the calendar. It could very well be the inflection point we've all been waiting for, the moment where the future of transportation stops being a distant dream and starts becoming a tangible reality. We're talking about Tesla's Robotaxi, or Robotaxi, as some are affectionately calling it, and the implications are absolutely staggering. This isn't just a new product launch. It's a potential seismic shift in how we move, how cities function, and perhaps most importantly for many of you watching, how a certain electric vehicle giant's valuation might explode. The coming weeks and months are critical, decisive, and loaded with potential. The time for speculation is rapidly giving way to the time for observation and, hopefully, validation. Get ready, because the robotaxi revolution is on the horizon, and understanding its trajectory is key to navigating the investment landscape ahead. Before we get too far into the weeds on the robotaxi's potential, let's ground ourselves in where Tesla's stock price has been and where the market sentiment currently sits. It feels like just yesterday we were watching the stock bounce off that crucial $27 support level after the split, a price that now seems almost impossibly low given the company's trajectory. Then came the incredible run-up, pushing the stock to its all-time high of $479, a period of pure euphoria for long-term holders. More recently, however, it's been a different story. We saw a significant pullback, finding a bottom around $221, a level that caused considerable anxiety and sparked endless debates about the company's valuation and future prospects. The volatility has been a constant companion, with swings of 10%, 20%, even 30% feeling like commonplace occurrences. This recent period, this churning around the low to mid-$200 range, feels like a consideration phase for the market. It's almost as if investors are holding their breath, waiting for the robotaxi event to provide clarity. There's a palpable sense of uncertainty, a reluctance to commit heavily in either direction until we get concrete details about the deployment. The market is asking, is this it? Is the robotaxi truly happening? And if so, what does it mean? This uncertainty is reflected in the trading patterns. We see short-covering rallies quickly followed by profit-taking, periods of sideways consolidation, and a general lack of conviction. It's a market waiting for a catalyst, and the robotaxi announcement and subsequent deployment are precisely that catalyst. This current price range, this period of hesitation, could be the last opportunity to position oneself before the true impact of robotaxi starts to be priced in. The market is digesting the concept, but it hasn't yet fully internalized the potential scope and scale of what's coming. We're in a holding pattern, a tense calm before what could be a very significant storm of upward momentum. The recent history of the stock, with its dramatic peaks and valleys, is a testament to the emotional roller coaster that is investing in Tesla, and the current sentiment is a clear indication that the market is keenly aware of the potential locked within the robotaxi vision, even if it's still struggling to quantify it. This is the fertile ground upon which future gains will be built, but it requires a clear understanding of the underlying potential. So if we're to truly quantify the impact of the robotaxi, we need to move beyond simply saying it's a big deal. We need to ask the hard questions, the questions that analysts are wrestling with right now, and the questions that will ultimately drive revisions to their models. The core questions revolve around the how and the when of deployment. How many robotaxis will be on the road, and how quickly will that number grow? This isn't a static number. It's a trajectory, a growth curve that needs to be understood. What about geographic expansion? Will deployment be limited to a single city initially, or will we see a rapid rollout across multiple locations? Which cities, which states will be prioritized? Understanding the geographic footprint is crucial for estimating market penetration and revenue potential. And perhaps most importantly, how does Tesla's deployment stack up against the competition? Who are the real competitors, and how do their current operations compare? These are the central questions, the ones that need concrete answers to move from speculation to informed projection. Simply having the concept of a robotaxi isn't enough. The market needs to see tangible progress, measurable deployment numbers, and a clear path to scaling. This is where the simulation approach becomes invaluable. We can't predict the future with perfect accuracy, but we can build models based on plausible scenarios, test different deployment rates, and analyze the potential outcomes. This is about moving from qualitative assessment to quantitative analysis. It's about taking the vision and translating it into numbers, vehicles deployed, miles driven, revenue generated, and ultimately, margin earned. The core questions are the foundation of our analysis, and addressing them systematically, using a simulation framework, allows us to build a more robust and credible picture of the robotaxi's potential impact. Without these questions, we're just guessing. With them, we can start to build a data-driven case for the robotaxi revolution. The market is hungry for these answers, and providing a framework for thinking about them is essential. Now let's talk about the competitive landscape, because it's often misunderstood. When people think of autonomous ride-hailing, the name Waymo often comes up. And yes, Waymo has vehicles on the road in a few select cities. They've been operating for a while, and they have a certain level of technological maturity. However, and this is crucial, Waymo has yet to demonstrate profitability or a clear path to scalable, widespread deployment. Their operations are expensive, limited in scope, and frankly, don't pose a significant threat to the broader ride-sharing market. Think of Waymo as a niche player, a technological demonstration rather than a mass-market disruptor. The real competition, the company that Tesla's robotaxi is directly targeting, is Uber. Uber is the undisputed king of the ride-sharing market, with a massive installed base of drivers and riders, and a presence in virtually every major city globally. Uber's business model, while successful in terms of market share, is inherently limited by the cost of human drivers. This is where Tesla's robotaxi has a fundamental advantage. By removing the driver, the most significant operating cost, Tesla can offer a compelling combination of lower prices for riders and higher margins for itself. To understand the scale of Uber's operation and set a crucial baseline for our analysis, let's look at a single market, Austin, Texas. Based on available data and reasonable estimates, Uber likely has around 2,000 active vehicles operating in the Austin area at any given time. This isn't the total number of registered drivers, but the number of vehicles actively providing rides during peak hours. This 2,000 vehicle figure in a single, albeit large city provides a concrete benchmark. If Tesla can deploy a significant number of robotaxis in Austin, even just a few thousand, it starts to directly compete with Uber's core operation in that market. This is the target, the real competition that matters. Dismissing Waymo isn't about downplaying their technical achievements, but about recognizing the fundamental differences in their business model and scalability, compared to Uber's established and vulnerable ride-sharing empire. The battle isn't between two autonomous vehicle companies. It's between a fundamentally more efficient autonomous service, Tesla Robotaxi, and a human-driven service, Uber. And that's a battle Tesla is uniquely positioned to win, starting market by market. To truly grasp the potential impact, we need to visualize the deployment trajectory. This isn't a flip of a switch, it's a phased rollout. We've developed 3 scenarios: slow, expected, and accelerated. Let's break them down visually, perhaps imagining a table or a timeline stretching from June 2024 to 2027. In the slow scenario, deployment starts cautiously. By the end of 2024, maybe we see a few hundred robotaxis in a single city like Austin, or perhaps a limited zone within a larger city like Los Angeles. Geographic expansion is slow, adding perhaps one new city every 6 to 12 months. By 2027, under this slow scenario, we might have a few thousand robotaxis deployed across a handful of cities. Comparing this to Waymo, even in their limited operational areas, Tesla's numbers would start small, perhaps even fewer than Waymo initially, but the rate of increase is where the difference lies. Market share relative to Uber in any given market would be negligible in this scenario. Now consider the expected scenario. This is where things start to get interesting. By the end of 2024, we could see a few thousand robotaxis deployed, perhaps across 2 to 3 key cities, or expanding within the initial launch city. Geographic expansion picks up pace, adding 3 to 5 new cities per year. By 2027, under the expected scenario, we could see tens of thousands of robotaxis deployed across a significant number of cities and potentially states. This is where Tesla starts to significantly outpace Waymo in terms of total deployed vehicles and geographic reach. In key markets, Tesla could be capturing a noticeable percentage of Uber's ride volume, perhaps 5 to 10% in the initial launch cities by 2027. Finally, the accelerated scenario. This is the game changer. Imagine thousands of robotaxis deployed by the end of 2024, perhaps even exceeding 5,000. Geographic expansion is aggressive, adding new cities and states quarterly. By 2027, under the accelerated scenario, we could be looking at hundreds of thousands of robotaxis on the road, potentially even 250,000, across dozens of major cities and states. In this scenario, Tesla's deployed numbers utterly dwarf Waymo's. More importantly, Tesla would be capturing a substantial market share from Uber in key markets, perhaps 20%, 30%, or even more in heavily penetrated areas by 2027. To quantify the potential here, let's think about the margin calculation. If a robotaxi can generate, say, $70 per mile in revenue, a reasonable estimate considering current ride-hailing fares, and operates for 200 miles per day, and operates 22 days a month, that single vehicle can generate significant income. While we'll delve deeper into the financial impact later, understanding these deployment numbers is the first step to quantifying the potential revenue and, crucially, the margin. The difference between these scenarios isn't just a few thousand vehicles. It's the difference between a niche service and a complete disruption of the transportation landscape. Now, how do these deployment scenarios translate into the world of analyst expectations, and more importantly, stock price movements? This is where the concept of the forcing function comes into play. For the longest time, analysts have largely ignored the robotaxi in their valuation models, or assigned it a minimal, speculative value. They've been waiting for concrete evidence, for tangible deployment. The Robotaxi launch and subsequent rollout provide that evidence. The pace and scale of deployment will become the forcing function, the undeniable reality that compels analysts to revise their models, to incorporate the Robotaxi's potential into their price targets. In the slow scenario, the forcing function is weak. Analysts might acknowledge the existence of the service, but the slow pace of deployment and limited geographic reach won't necessitate significant changes to their models. The stock price might see a temporary bump on the initial announcement, but without sustained visible progress, the enthusiasm will fade. There's no pressure to revise valuations upwards. In the expected scenario, the forcing function becomes stronger. As Tesla's deployed numbers start to outpace Waymo's and begin to show a measurable presence in key markets, analysts will be forced to take notice. They'll see a credible path to scaling and will begin to incorporate a more meaningful value for the Robotaxi business into their models. This is where we start to see analyst upgrades and price target revisions based on the Robotaxi. The color coding here might start to shift from red, ignoring the Robotaxi, to yellow, watching closely and beginning to factor it in. The moment Tesla's deployed numbers demonstrably overtake Waymo's total operational fleet becomes a key milestone, a clear data point that analysts can no longer ignore. But the true forcing function, the point where analysts must drastically revise their valuations, comes in the accelerated scenario. When Tesla is deploying thousands of Robotaxis quarterly, rapidly expanding into new cities and states, and visibly taking market share from Uber in key markets, the evidence becomes overwhelming. Analysts will be forced to integrate a significant and rapidly growing revenue stream and margin source into their models. This is the green light moment, the game over for the bears who have dismissed the Robotaxi. The color coding shifts to green. The Robotaxi is real, it's scaling, and it's fundamentally changing the valuation equation. The more aggressive the deployment, the faster and more dramatic the analyst revisions will be. Think of it as a snowball effect. Initial deployment leads to data, data leads to analyst revisions lead to increased investor confidence, which drives the stock price higher, which potentially fuels further investment in scaling the Robotaxi fleet. Understanding this forcing function and watching for the key milestones, overtaking Waymo in deployment, capturing meaningful market share from Uber, is essential for investors looking to front-run these analyst revisions. Let's translate these deployment scenarios into potential financial impact, focusing on the numbers that truly matter: margin and revenue. This is where the rubber meets the road, where the vision of autonomous transportation starts to become a quantifiable business. We talked about the potential revenue per mile and daily mileage in the deployment scenario section. Let's expand on that and look at the margin. If a Robotaxi generates revenue at a certain rate per mile and the operational costs, electricity, maintenance, insurance, etc., are significantly lower than the revenue, the margin per mile, per day, per month, and per year becomes incredibly attractive. Imagine a conservative estimate of operating costs being significantly lower than the revenue generated per mile. This leads to a very high gross margin percentage for the Robotaxi service compared to traditional car sales. On a per-vehicle basis, this high margin translates into substantial monthly and annual profitability. Now, scale that across the deployment scenarios. In the slow scenario, the financial impact is minimal in the near term. A few thousand vehicles generating profit is nice, but it won't fundamentally change Tesla's overall financial picture. In the expected scenario, the financial impact becomes noticeable. Tens of thousands of robotaxis, generating high-margin revenue, start to add a significant chunk to Tesla's bottom line. We could be talking about hundreds of millions, perhaps even a few $1 billion in additional margin annually by 2027. But the accelerated scenario is where the numbers become truly staggering. If Tesla reaches 250,000 robotaxis on the road by 2027, the financial impact is immense. Let's make a conservative projection based on the potential margin per vehicle. If a single robotaxi generates a significant monthly margin, calculated from revenue per mile minus operating costs, multiplied by daily miles and operating days, then 250,000 of these vehicles generate a truly colossal amount of additional margin. We're not talking about millions anymore, we're talking billions. Under the accelerated scenario, it's entirely plausible to project an additional $10 billion in EBITDA, earnings before interest, taxes, depreciation, and amortization, in 2026 solely from the robotaxi service, and potentially reaching or exceeding $40 billion in 2027. To put that into perspective, that kind of additional EBITDA is transformative for a company of Tesla's size. It would significantly boost profitability, cash flow, and ultimately, valuation. This isn't just a side hustle. This is a potential core business that could rival or even surpass the profitability of their existing automotive and energy segments. The beauty of the robotaxi model from a financial perspective is the leverage. Once the autonomous driving technology is mature and the infrastructure is in place, each additional deployed robotaxi adds a significant amount of high-margin revenue with relatively low incremental cost. This is the power of scalability in a software-defined transportation service. The potential financial impact is the ultimate forcing function for analysts and investors alike. While the immediate focus is on disrupting the ride-sharing market, that's likely just the first step. The robotaxi represents a fundamental shift in how we utilize vehicles, and the potential for expansion beyond simply moving people from point A to point B is enormous. Think about logistics and delivery. A robotaxi network can easily be repurposed to move goods instead of people. This opens up massive new markets, from local grocery delivery to last-mile logistics for e-commerce companies. Imagine a future where autonomous Tesla vehicles are not only picking up passengers, but also delivering packages, groceries, and other goods 24/7 with unparalleled efficiency. This represents a significant step change in revenue potential, moving from a single revenue stream, passenger transport, to multiple, potentially even larger revenue streams. Furthermore, consider the potential for mobile services. What if a robotaxi could also function as a mobile retail point, a pop-up shop on wheels, or even a mobile workstation? The possibilities are limited only by imagination and regulatory frameworks. Of course, these are longer-term visions, and their realization depends on continued technological advancement, regulatory approval, and market adoption. There is inherent uncertainty in projecting these future revenue streams. However, it's crucial to keep this long-term potential in mind when evaluating the robotaxi business. The initial focus on ride-sharing provides a clear, immediate market opportunity, But the real long-term value lies in the expandability and versatility of the autonomous platform. This is why continuous monitoring and model refinement are so important. As Tesla demonstrates success in the initial ride-sharing rollout, the probability of these future use cases becoming a reality increases. Our models will need to evolve to incorporate these potential revenue streams as they become more concrete. The Robotaxi isn't just about a new car, it's about building a foundation for a completely new type of transportation and logistics network, one that has the potential to unlock unprecedented value. This next step change, the expansion beyond ride-sharing, is the long-term vision that makes the Robotaxi truly revolutionary and offers a glimpse into a future far beyond what we can fully grasp today. All right, so we've laid out the potential, dissected the scenarios, and discussed the financial implications. Now, it's time to engage and refine our understanding together. This journey into the Robotaxi revolution is ongoing, and the more data points and perspectives we can gather, the more accurate our analysis will become. That's why I want to invite you to join the community at Pioneer Lands. This is where we're refining these models in real time, incorporating new data as it emerges, and engaging in deep discussions about the implications. Inside Pioneer Lands, you'll get access to the detailed, evolving Robotaxi deployment model, the one that powers these scenarios and projections. You can see the inputs, understand the assumptions, and track the progress. More importantly, you can be part of the conversation. Do you have insights into Uber or Waymo deployment numbers in specific cities? Have you seen evidence of Tesla testing robotaxis in new locations? Your observations and research are incredibly valuable and can help refine our collective understanding. Share your thoughts, challenge the assumptions, and contribute to building the most accurate picture possible of this unfolding revolution. This isn't just about passively watching, it's about actively participating in the analysis. The opportunity to front-run analyst revisions, to position yourself before the market fully grasps the magnitude of the Robotaxi's impact, is real, but it requires informed conviction. Being part of a community dedicated to understanding these dynamics gives you a significant edge. We'll be continuously updating the model as new information becomes available, and having a community to dissect that information is invaluable. We're also working on a dedicated Leap simulator video, which will take these Robotaxi projections and show you how they could potentially translate into options trading strategies, further helping you leverage this understanding. The future of transportation is being built right now, and understanding its trajectory is key to navigating the investment landscape ahead. Let's explore this future together. To recap, June and the months that follow hold immense potential for Tesla and the transportation industry as the Robotaxi revolution begins to unfold. We've explored the recent stock performance, the crucial questions surrounding deployment, the real competitive landscape with Uber as the primary target, and the potential financial impact across different deployment scenarios. The concept of the forcing function highlights how tangible progress in deployment will compel analysts to revise their valuations, creating significant opportunities for investors who understand the potential. The long-term vision extends far beyond ride-sharing, promising even larger revenue streams. This is a dynamic situation, and continuous monitoring and refinement are essential. The potential for significant returns by front-running analyst revisions based on the accelerating deployment of robotaxis is a compelling prospect. Don't miss out on the opportunity to gain deeper insights and engage with a community of like-minded individuals focused on understanding this transformative technology. Head over to Pioneer Lands and let's continue this analysis together.